What is going on, guys? Welcome back. Commentary for you. As always, you guys know I'm a Webull preferred influencer. Use the link down in the description by November 30th, and you will get 4 free shares if you deposit more than $100. You don't deposit anything, you just open an account, they're still going to give you 2 free shares. However, if you deposit that $100, you'll get a value of more than $20. Really good deal. As you can see, I've been getting Cledera. I'd love to know what you guys get because honestly, Cledera, all these free shares factor into how I deal with it. Also, down in the description, link to Steel Supplements. Had a couple people ask, if you want to try their products, they have a couple free bundles. You just pay shipping, gives you a great opportunity to try it. You can get a shirt free of charge, just pay the shipping and they'll cover you. Also, want to talk about a major milestone I mentioned earlier in the week. My Robinhood account went over $20,000. And I just can't tell you how much it means to me to have your guys' support because so much of this money is you guys supporting me and my channel. Now, in terms of how we dealt with Cledera, getting back to Webull, I did mention getting those 5 additional free shares really factored into what I did here. We've been selling out 1070, 1220. Man, I'd love to get back to a point at 1220 we could sell 1076, 1128. So we're right there. And to be honest with you, when you look at our whole portfolio here, we're only down on lamb, which is one of our safer plays. I mean, it's food. So I'm really not in a hurry to buy anything at all these market highs, right? I know the market's going to pull back at some point. I did, however, make one small change, and I kind of broke a rule. I don't like to have the same company in both portfolios, but Stag Industrial, I really feel like even at highs, if you know the company, if you're comfortable with the price, it's okay. And me personally, I think Stag under $30 is an absolute buy. This is a company that has a lot of warehouse real estate and is always going to be in demand, more so if things continue to struggle the way they have. You can see here we picked them up for $29.82 because we sold off the shares of Cledera. And to me, it's an even return, right? And when I talked about owning this in my Robinhood portfolio, I've got 30 shares at $28.77. So we're just about $1 off on cost. But the great thing about Stag is it's a REIT. It's going to pay you every single month. So you saw that kind of fluctuation with the price in Cledera. It's not true value to me going back if it's not a dividend stock, right? It's just a fluctuating tech stock. That has me a little bit concerned. Sure, I've got room for tech stocks in my portfolios, but I don't want one that's going to really fluctuate $1, $1.50 like that. I'd much rather know I'm going to have Stag that, sure, it can fluctuate, but I'm getting a return every single month on these shares because it's going to pay me 12 cents per just to hold. That right there, in the course of 2 to 3 months is that 25, 36 cents range that you're going to see that fluctuation on Cledera, and it's not going to be a real value while this is holding, not a real high payout ratio, continuing the 5-year growth rate. They kind of got kicked back on the dividend growth, like a lot of companies did, honestly, with growth over what's happened. And you can see, just to go back to my Robinhood portfolio, I've been reinvesting while they've been down. So $2.64 back in July, up to $3 for June, August, reverse that. It's actually July, August, September, and then obviously getting into October, November, even more shares at $3.60. So to me, this is where you really see the value in stocks. Personally, yes, you guys know I own 6 shares of Tesla. It's up over $1,000. Easy for me. It's really factored a lot into that $20,000, but you have to have some stability behind it. And to me, the stability comes with companies like Stag, like even Haynes, for example, that we've looked at in terms of just getting you companies that are going to hold within a range, but also pay you dividends and increase what you have in terms of the account. So I feel like when you have an opportunity to buy a company you're familiar with and a company and honestly, when you're at all-time highs, really all you should be doing anyway, I really wouldn't be exploring the market right now when everything's at a high because, listen, there's risk-reward. We talk about it a lot. When you're buying an all-time high, you're running that risk. Can it continue to go up? Absolutely, right? But can it also go down? In my opinion, from all-time highs, more than likely, I'm sitting on money right now. I'm waiting for that 5% down day. If I was you right now, and I was going to go ahead and spend that $100 to put in the account to get those 4 free stocks, I would take my free shares, I would sit on those, I would maybe even consider selling those if we continue to be at all-time highs, and I would let that money sit, until there comes a down day, which is going to happen. Probably not before the end of the year, a heavy down day or a heavy down week. Generally, things kind of progress upward as, I hate to say it, people go through the holidays. There's news about, progression through what we're going through that we really still can't talk about on YouTube. It's weird, but, things are looking better. I would wait for some catalysts to draw the market back a little bit and get those quality prices on stocks and then just look to hold. You can go back and look at these videos just a couple months ago, guys. I was down 3, 4, 5, 7% on some of these stocks like CVS, and they will go back up. But the trick is to not buy it when it's that high. You want to buy it when it's low. You want to hold it. You talk about the dividends and the percentages. Listen, the cheaper you buy a stock like Stag, the more percentage you get on a return for that investment. That 12 cents they're paying me in my Robinhood portfolio, where I bought at $28, is more of a percentage than it is in my Webull portfolio that I bought at $29. So you have to factor into that. I am not a trader. I'm an investor. I invest in a company and I'm there. I stay there for the dividend and I stay there for the value appreciation. That's why when I look at some tech companies, I don't always see it. Am I willing to play the game with them, wait, hold, and see? Sure. We've held on to Opera, which is a web browser, for months now. I'm okay with that. I'm comfortable with that. A stock like Cloudera, really not all that comfortable, even though it's probably 100 times the size of Opera. Other than that, guys, let me know what free stocks you're getting. I would love to see your guys' value and growth in your stock market portfolios increase. Appreciate you checking this out, and I will be back in the week with more commentary.